Hello and welcome back to Katie's Business Tips. Michael Lapide here in a series talking about financial freedom for business owners, for individuals, for families. And right now we're going to talk about the second step in the 5 steps, which is to eliminate bad debt. Many Canadians are unable to successfully deal with their debt. It is getting worse all the time. The statistics are through the roof. Recent reports present a very alarming picture. Many are racking up too much debt and unable to keep up with the payments, and the credit card debt in the country is through the roof. We need to take responsibility and step up to our debt both corporately, in our business, and personally. One of the very first steps in taking control of our debt is to be able to have an accurate picture where you stand in terms of your debt. So first of all, we list our debts. Then we look at what debts are good debt versus bad debt. Now, bad debts obviously are debts that are consumer debt, we're paying high interest on, it's not earning you any income, you're just paying for something because you borrowed money to either do something fun or to buy something fun and it's depreciating. Okay, that's bad debt. Good debt is debt you borrow to invest and earn money, so your company borrows a line of credit so you can hire more employees and make more money or buy more inventory, right? Or personally, you're borrowing a mortgage and you're going to buy a rental property, right? That's the good debt more we're talking about, because there's going to be cash flow coming in to pay that debt and you're deducting the interest on the debt, right? So we're breaking down those debts, we're listing them and saying which ones are good, which ones are bad. And at the end of the day, we want to make sure that we then focus on our good debts on one side and our bad debts on the other side, so we can eliminate the bad debts first. So we put them in priority order. We start eliminating. So credit cards, right? High credit card interest. We don't want to be paying credit card interest. We should be using the credit card and paying it every month, right? Personally and corporately, business-wise too. High interest loans, notes, credit lines, get rid of them. Non-deductible loans, notes, line of credit lines, get rid of them. The non-deductible mortgages, get rid of them. Family and friend debts, debts to family and friends with no repayment structure, that is a problem. Make sure if you ever borrow money or lend money to a family member, a friend, or anything like that, you have something in writing, because otherwise there's a high chance the relationship could get ruined. 3 ways to eliminate your bad debts. Number 1, within your close circle. Number 2, the close circle overflow. And number 3, using some bad debt elimination strategies, such as refinancing at lower interest rates, consolidation, depositing paychecks into your line of credit, a daily interest line of credit account, such as the ManU1. Make your interest on your mortgage tax deductible by maneuvering, we call it the Smith maneuver, but maneuvering your investments and your mortgage to make sure you're deducting that interest, and some other rapid debt reduction strategies that we could talk about too as well. After we eliminated the bad debts, then we can look at minimizing the good debts as we can pay them down as we're comfortable. But eliminate bad debts, step 2. Got any questions? We'd love to hear from you. We'll look forward to seeing you in our next video.